Hello, today is the 24th of May 2011, and it is roughly around 20 after 11 New York time. And we'll start with the longer term chart going back over 11,000 days. That's what the numbers on the bottom of the screen emphasizes or is showing. This takes us back to 1980, and then the big fall, seeing the price of 100 ounces of silver going from 5,000 down to about 400. And for 1 ounce, you just put a decimal beside this, basically 49.76 on the right hand side. This chart is logarithmic, meaning that it works within percentage moves. If you divide any of these numbers by its lowest, they'll all have the same number, rounded of course. Now, as far as what we're recently stating or seeing, we got this trend line, which is obviously well intact. By drawing it on the parallel flip side, it to me looks as if it's trying to break out of the range that it was trading in, an upward range, and the market has managed to come back down to this level, which right now is that of support. When you do that, then of course you're going to have a higher uptrend level, which is this one in here, and we're well above this level too, which is quite exciting, I think. I don't know. Now, as far as parallel trend lines, I really can't connect it to anything but maybe, oh, what's the best thing? Maybe this in here. That might be the best trend tool. So it pretty much found resistance within the area. And just for previous resistance, when you are at an area you haven't seen in quite some time, which was the situation in here, then you generally are going to get a bounce. Mathematically, as long as it can stay above this line and then come back towards that level, it increases the chances of it taking it out. And that level is $21 an ounce. It still has stayed well above 30. And if it manages to make this little handle, as some people state, the lower or the higher this bounces from, and really 32 is fairly high, the more bullish this lets us become for future gains. And the fact of the matter, and I've said this before and I'll say it again, that we are even talking about trying to get above the nominal 1980 level. It's just insane, but it also makes it easier to state to yourself, I wonder what kind of sale prices are available within the silver metal. It's been highly suppressed, and because of that, it's an advantage, I think, to be able to buy at these kind of levels. As far as the comparison from the big rally of 1979 to the current one, it can still rhyme, and that's the whole point. History doesn't repeat itself. Oftentimes it rhymes. In fact, the comparison pretty much died here because it didn't go up when it was supposed to. Orange being the current one, then it went above it here, and well, we were well above it for quite some time, and now the reverse is true. And to get back to where we need to be within here, the market needs to get back above, well, 200% on a breakout of 18 or almost 18. That's 36 plus about 52. We'll even say $50 an ounce just to get back to this trading range. And then in this point here where it ends, that's where it was just exploding from. And even the technical analysis for this point, you can see in here how it was making all of these higher lows, but it was also making lower highs, and that's when you get a symmetrical triangle formation. Okay, now as far as the hourly chart is concerned, we had this little trend line that is broke, which was pretty much in here. It's also came back up towards this previous resistance point where it's finding a little bit of resistance as we speak, but overall not too much. The next significant resistance points will be, I don't know how much this is going to be resistance. This is only a running average from the major top that occurred from the crash. But this is a 50-day moving average, and this is a significant Fibonacci point. As long as it stays below this line on this, it's still bearish. And I'm going to be stating on the intermediate term, we have an unconfirmed uptrend. However, within this whole situation, it is still that of a bearish situation, which is fine. If it comes up to this level, maybe it meets up with the 50-day moving average. The key is to come back down and don't break below 36, which was the previous level of resistance we are just getting above. Now, we still got a ways to go to get to this level, which is roughly around $38 an ounce. And this will be the first test of the 50-day moving average since it started to decline when it happens. And as I've mentioned before, if this becomes a move where it gets above the 50-day moving average, this is going to be one heck of a failed move. But right now, that's jumping the gun, and we'll get into that if and when that happens. I'm going to now shorten this out, but what's important to know for the next chart is the next Fibonacci level's got to do with this high and this low. And here we go. So the first Fibonacci level was in here, which means as long as you stay below it, it's bearish. Well, it's now no longer below it. It's not bearish. Because it's within this range, it is neutral. If it does go below, or if it does break above this mark in here, that means that previous selling that took the market from 39 to 32 would become that of a failure. The trend, which was a confirmed neutrality, has been changed to an unconfirmed uptrend with a rising 5-day moving average. For me to see a confirmed move, I need to see a nice breakout above this level and either break it by yet another dollar or so up to about the 37, we'll even say above 37, hold this area, stay above it for maybe more than 4 or 5 hours, or have a move where it comes back down, finds some support within this 5-day moving average, breaks above resistance, and then again, that would be a confirmed uptrend. I was stating that within this level, it was either going to be resistance or support. Right now, it is looking as if this level is going to be that of support as far as the trend line is concerned. And I haven't drawn one in yet, so I'm doing this for the first time personally. This was a tight range in here. So once again, I'm just going to see how this thing has been or how this thing has been playing out as far as parallel is concerned. Alrighty, so let's see where these lines match up. I have don't know what to expect. Well, there was resistance in there. So it's working out fairly nice, and obviously it's came up after breaking this resistance field. It came up to the next line, found support again, broke through. It's finding support at this mark again, and on a breakout, where do I think it would be going? Well, it would be this resistance line in here. Now this is really tight range, so it's very normal when that's the case for you to go through different several amounts of these variables. But if we break above this resistance field, it wouldn't surprise me if it does find a little bounce up towards that level in there. Okay, I think that's about it. So have yourself a great day. Bye-bye.